The second quarter Euro GDP data release showed a decline of 0.2% today, despite German growth. Joining me now to discuss this further is Ilian Yotox FX strategist and owner of allthingsforex. Hello, Ilian. What do you think today's figures tell us about the Euro crisis?
Well, it tells us that things are not getting any better, obviously. In the first quarter of 2012, we saw the German GDP report sort of helping lift the overall Eurozone numbers. And I think that everyone pretty much expected that the Eurozone will be in a double-dip recession. We already had it contract in the fourth quarter of 2011. And I personally was expecting that we are going to see another second consecutive quarter of contraction in the first quarter of 2012. But because of the stronger GDP numbers from Germany, we didn't technically see that contraction that everyone was expecting. We saw the Eurozone growing, pretty much not growing, but it was flat at 0%, but it was a little bit better than the forecasts for a contraction. So technically we could not claim that the Eurozone was in a recession. And now with the second quarter report that was released earlier this morning, I mean, obviously we have a little bit of a positive reaction to the German, better than expected German growth, which was a little stronger, but it did not help this time. It did not help the Eurozone overall numbers, and we saw the Eurozone GDP dropping by 0.2%. And I think that looking at current economic data, if this continues to be the case, that this would probably be the numbers that we'll witness in the third quarter, and we could easily see the second quarter and the third quarter contraction in the Eurozone, which is going to be the definition of a double-dip recession.
Economists are now saying there is a likely chance of a decline in Q3 due to big budget cuts, high interest rates and sovereign debt rising. What are your thoughts? Could they be right?
I think so. I think that they definitely can be right. I actually expecting that myself. I was expecting it to happen a lot earlier than it is going to happen. As I was saying earlier, I was expecting 2 consecutive quarters of negative growth in the fourth quarter of 2011 and the first quarter of 2012. But now even the German numbers are not that much better than the forecast, and I think that Germany is not going to be able to lift up the overall figures going forward. The slowdown is apparent in the Eurozone. And I think the European Central Bank will have no other choice but to stimulate the economy further. And for months now, I've been saying they have 3 options, and neither one of these 3 options, whether they're going to step in to buy more bonds and expand their already inflated balance sheet, or do another round of long-term refinancing operations, which will do the same thing. And, of course, the third option is for them to cut interest rates, which is another option that I don't think that is going to be a euro positive. So it doesn't look, the picture does not look very bright, so to say. The future does not look very bright for the euro.
And what are your projections for how the euro will hold over the short and long term?
Well, I think that in the short term, everyone's pretty much expecting that there's going to be some sort of an action from the European Central Bank, possibly more bond buying. I would not exclude another interest rate cut in the months ahead. I think that the next couple of months ahead of us are going to be very crucial as far as the next phase of the Eurozone debt crisis. I think that the problems there are much deeper than the politicians there acknowledge them to be. And September and October will be challenging months for the euro. It will depend if somehow European leaders realize that it is now the time to act, and new, bold, and concrete solutions are taken. And I'm talking structural changes towards a fiscal and political union. Perhaps the market could react in a much more positive way towards the euro. However, given the track record in the last 3 years, since the Eurozone debt crisis started, I remain pessimistic as far as European leaders finding these quick and comprehensive solutions and being able to implement them in a faster way. So I think that the future for the euro is not very bright, and I'm expecting that it will more than likely revisit its fair value range, which is estimated to be between $1.15 and $1.20. And we have a major support level, by the way, from 2010, which is just a little bit below $1.19. I think that level will be tested in the next couple of months.
Now, some analysts believe that if Euro GDP declined in Q2, Q3 and the fourth quarter, the Eurozone region will be heading for a recession. What do you envision? Do you think this will happen?
Unless there's some significant changes and surprises, which I think that we might see some improvement going forward, but I think that second quarter we already are witnessing the contraction. We need another contraction in the third quarter, and we can technically claim that the Eurozone is in a recession at that point. The United Kingdom's already in a recession. They have three consecutive quarters of contraction. So I expect that could easily be the case with the Eurozone. As I mentioned earlier, I don't see Germany this time around helping the Eurozone GDP dodge the bullet. So I think that will be the outcome. And further economic weakness, by the way, in the Eurozone is, I think, going to weigh on the single currency as well.
Thanks for joining me, Ilian. Well, that's all we've got time for right now, but stay tuned to Dukascopy TV for more updates and interviews. For now, though, goodbye.